Okay, guys, welcome to a short video by myself, Ricky Stubbs, if you're not sure who I am. And I'm going to be showing you here how I take the trades from the Gold Scalping Group. Now, unfortunately, over this weekend, the group has been closed and there's a new one opening, and I can't currently access the previous trade. So I can't now show you how these trades come through, which is a little bit annoying. So I may redo this video at a later date. However, I'm going to explain to you what I do, why I do it, and how it works for me. Now, you might not take this information on, you might not utilize it. It might help you adjust what you already do. But so I know some people are struggling with how to take these trades and how best to manage these positions. So I thought I'd do a short video for you guys just to have a look. Now, I've got 5 trades from the Monday just gone, which is the Monday the 23rd. And I'm going to show you these, and I'm going to show you how they played out. Okay, so this blue line here, this is when the trade was called. Okay, so price was up here when the trade was called, and this white box is our buy zone. These are the figures that were called. So it was 4255 or 425, yeah, 4255 to 4250, and then 4249 was our first stop loss level. But also in the message, which unfortunately I can't show you now, it does say invalidation zone 4249. But underneath it says price could also come back to, and this was 4247, I believe, or 4246. That's what the message would say. So you have a choice of setting your first stop loss here, or setting your stop loss at a lower level and giving yourself a little bit more breathing space for the trade to play out. Now, obviously, in this example, it didn't make a difference because it hit both, but that's why there's 2 zones, okay? Now, if you have a failed zone, and by a failed zone, we mean price falls all the way through, hits our stop losses, and never at any point pushes into profit, depending on which stop loss you took, you'll either have 120 pip loss or 180 pip loss if you have layered into the position 3 times, which is what I do. So the top of this box here at 4255 is our first position, okay? So price hits that and it activates. Now, me personally, I then look 20 pips. Where's the one I want? There we go. I would go to 20 pips below the first entry, and I would set another entry here. Okay. Just change that color so it's not the same as a stop loss. And again, I would then set another entry. So that's 5.3. I'd come down to 5.1 roughly. And I would set another limit order here. So now we have 1, 2, 3 layers. So we have 3 positions in the market that we was looking for a reaction to the upside. So from our first, if I just show you this here, from our first entry at 5.5, brilliant. Let's just zoom that down so I can get to the bottom. There we go. And if we use our worst case scenario, which is our furthest away, okay, forget the upside. The upside's not important right now. Okay, so if that is entry level 4255 and the stop loss level, I believe, was 47, I believe, right? Something around there. So from our worst entry or our first entry to our stop loss, there's an 80 pip gap, okay? 80 pips. Our next entry is 20 pips lower. So our second entry would have a 60 pip gap to our stop loss. And our third entry is another 20 pips lower down here. So we then would have 40 pips to our stop loss. So you add those 3 stop losses together, you've got a total loss of 180 pips, okay? That's how you can layer into a position. Now, obviously, the first example I'm showing you is a loss because the first trade of the day on Monday was a loss. It is what it is. Now, in terms of recovering a position, let me just reset the price and we'll move over to here. Right, okay. We then had a trade over here. So trade gets called at 13.43 and we have a sell zone, which is again this white box here. Okay. And price pushes up, as you can see. Let me just move this out of the way a second so you can see the wicks. Okay. Price pushes in, activates our first level. 20 pip drop, activates our next level. 20 pip drop, activates our next level. Now, these are all what they call sell limits. You would be putting sell limit orders on to these positions, okay? Which gives you another 3 entries. Now, remember, if we use our worst stop loss, or our furthest away stop loss, which would be this one up here, we know that we are risking 180 pips if this zone completely fails and price just pushes through and hits stop loss. Now, your take profit is where you get to decide your own risk, okay? Now, what I do, and I do this purely out of convenience, by the way, because I have I don't have the time always to sit and manage these trades, right? So if you give yourself a small 40 pip stop loss from your first entry, okay, and if we just drop this down to make it a little bit clearer, actually. So let's just get back there. So we're on the 5-second chart now, just to show you a little bit slower how this works. Okay. Price pulls in, activates our first entry. So we have the potential for 40 pips once this one's activated. Okay. Price then drops and activates our next entry level. So we now have a potential of 40 pips plus 60 pips, because now we have 2 potential positions to hit this target. So now we have a grand total of 100 pips potential upside. Price then drops and activates our third level. At your third level, you now have another 20 pips gained. Okay, so we had a 40 pip, a 60 pip, and now we have a potential 80 pip take profit. So what have we done? We've cancelled out the 180 pip loss from earlier on today with 180 pip potential win, which price does come back down and hit that 40 pips. Now, doesn't sound like a lot, 40 pips to take profit, and it isn't really. But this is called a scalping group, okay? This isn't a signals group. This is a scalping group. So the idea is to get in and out of the market as quickly as possible. So granted, if it only activates your first level, you're only going to make 40 pips. You've only made a slight dent in 180 that you lost before. But that's the reason for layering into the position. Okay, so hopefully everybody's with me so far. Now, when all three activate, you've made 180 pips and we've leveled it up. Okay, next trade comes in. 1401, so price is down here. Now the sell zone. This is our box. These are our 2. I don't need to explain everything again. Now, the other way to manage this, and this is why I want to show you these 2 next to each other. Price comes in and it activates our first level. So we now have a potential of a 40 pip gain, but it carries on through and activates our second level. So we've got an extra 20 pips on there. So now we have a 60 pip position from this level and a 40 pip position from this level. We now have a potential for 100 pips. Price then pushes through and takes them 2 positions out. Okay, so you have 100 pip take profit, done. When this happens, delete, because remember we would have had, so if that was 7.1, this would have been 7.3. Okay, around this area, you would have had another layer. Okay, another entry layer. Okay, but we've not taken that layer because it didn't activate. So once price pushes through and your two positions that opened have now closed, delete this order. Don't leave that sitting there, because what happens? Price turns round, activates, goes through, hits stop loss. You would have wiped out your profit from here with your loss here. So the most important element of managing these trades is, once you've decided what take profit you want to have, you then need to delete any orders that haven't now activated. All right. Now, this is the most simple way of doing it. Now, I know there's bigger targets. I know you can leave runners and all the rest of it. That's something that you can learn to do, something that you can work out whether you can do alongside your schedule, your work, whatever it may be. All right. I'm just showing you the most simple and effective way to get in and out as quickly as possible. Because remember, when he puts these trades in, he says sell zone. You set up your limit orders. Price starts moving up. He will then put another message into the group saying zone approaching. That's the only time. Zone approaching, open your MT5 and watch this trade play out. For the sake of a few minutes, not even that in this case, but you know, it moves very, very quickly. Bearing in mind, I'm on a 5-second chart here. Yeah. So this is moving very, very quick. But once you've got the trade in, as soon as two levels activate and then it hits take profit, delete the one that you've got in there. Just get rid of it. Don't leave it sitting there to potentially lose. Okay. And wipe out the profit you just made. So I'm hoping that that is making sense. So we'll move on to our next one. And this is an example of where only one level activates. So price gets called here at 14.17. The trade actually activates 14.19. Okay, so it's 2 minutes between the figures going in and the trade activating. But what happens if you're now watching it? Okay, so you get the message zone approaching. The trade activates. You're watching your MT5. It activates level 1, but it doesn't activate level 2 or entry 2, whatever you want to call it. And obviously, if it doesn't activate level 2, it doesn't activate level 3. Price immediately reverses and gives you 40 pips profit. So that first trade that you've put on, that sell limit, has opened and closed again. As soon as that happens, delete these two levels that didn't activate. Get rid of them. Because if you wait, price comes back up into those levels. Now, depending on which stop loss you used, you may have activated them and took a take profit. If you used the bigger stop loss, if you used the tighter stop loss, you would have been stopped out the trade and you would have lost these two positions and only won this one and overall been in a negative outcome. Okay. And one more is a little buyer position down here. And this is the importance for me, okay, of just giving it that little bit of extra room. So you can see 15.17, the trade was called where this blue line is. Here's our buy zone in this example. Price comes down and activates. Now, if our buy zone, I'm just going to use the ray because I can't be bothered to keep drawing it, 35, so it'd be down to 33 around this area. And then you'd have 31 around this area. So you'd have 1, 2, 3 levels activated. Price pushes in, doesn't hit our stop loss, okay, if you give it the room to breathe. So you take that second number that the trader gives you. Price comes back up, pushes up, pushes up, pushes up, and hits our take profit. And there you would have had another 180 pips gained. So that is the simplest way, in my opinion, of getting in and out of the market as quickly as possible and using this for what it says on the tin, using it as a scalping group, okay? In and out of the market, take your profit, get done, be done with it. So hopefully this makes sense. I'm putting the link in so you'll be able to see this on my YouTube channel. Anyone's got any questions, if you're in the support group, just fire them over to me individually if you like. It's not a problem. Get the questions over. I'll get them answered for you. But I hope that this has explained enough for you. Thank you, and I will see